Hi everybody, Scott Fuller here with another edition of the East Bay Real Estate Market Minute. Today I'm joined by Blvd with AAG. Fernand, thank you for being here today.
Thank you, Scott. I'm happy to be here.
Awesome. Today we're going to be talking about reverse mortgages. This is something that probably not a lot of people know about, right? I mean, you might hear about it a little bit, and maybe you see kind of the commercials on about it, but for a lot of people, I think it can be a very viable solution. But let's find out really who that is and who that could benefit. So tell me a little bit more. Let's just start with maybe an overview of what is a reverse mortgage.
Okay, Scott, happy to. A reverse mortgage is a loan, just like a loan that I have on my house. It's a mortgage. But the difference is that instead of making a monthly mortgage payment on that loan, the loan is paid back when the homeowner leaves the home permanently.
Got it. So basically the home is paying you to live. Would that be a fair assessment?
I think that's an excellent assessment.
Okay. All right. I just made that up. We'll make sure that that's actually correct. So who is a good candidate, and maybe a couple of the criteria to qualify for something like that, because it is so different than a traditional mortgage?
Sure. So a candidate for a reverse mortgage or a home equity conversion mortgage is a homeowner or a home buyer that is 62 years old or better.
Okay.
And if the homeowner wants to use the loan as a refinance to generate cash flow, then they have to have significant equity in the property.
Okay.
If they're going to use the loan to purchase a home, then their down payment provides the equity in the property.
Okay, excellent. And we talked about a couple different types of reverse mortgages, right?
Yes.
But you also called it a home equity conversion mortgage.
Yes.
Is that right?
That's true.
Okay, I want to make sure that I got that one right.
Yes.
Okay, so tell us about maybe some of the different types of reverse mortgages.
Sure. So there's two types of reverse mortgages. There's the home equity conversion mortgage that is insured by the Federal Housing Administration that a lot of people are familiar with. They've been around since the 80s in the version that we know. And then there's also the high value home equity conversion mortgage, or the jumbo loan, that is best for homes that are north of $800,000.
Okay, so maybe homes that are worth a little bit more, they have a little bit more equity in them as well.
Yes.
And we were having an interesting conversation because you've also put together scenarios where somebody might be, let's say, retiring in the Bay Area, and they've got some equity in the property.
Yes.
And you've helped them to be able to make a purchase using the reverse mortgage somewhere else, whether it's in state or out of state or anything like that. Give us kind of just a quick example of like what that looks like if somebody who's watching this maybe would want to consider doing something similar.
Sure. So I've helped several people do this, and oftentimes it's because they want to be relocating close to family.
Mm-hmm.
Or in one particular instance, I had a couple that owned a large home on 3 acres of property, and they could not maintain it any longer. So they sold their home, they paid off their existing mortgage, and then with the remaining sale proceeds, they had about $400,000 in cash.
Got it.
Right?
Okay.
So then they purchased a condominium for $400,000, but instead of using all $400,000 in cash to buy that condo, they put a $200,000 down payment on the home, and then the remaining $200,000 they worked with a financial advisor to boost their retirement nest egg.
Got it. So they didn't want to invest everything into the property. They wanted to be able to say, we want to leverage this money and have some to be able to invest for their future use and for their retirement.
Exactly. So they have the benefit of living in a home without a monthly mortgage payment, and also having increased their retirement nest egg. So their monthly income now, working with their financial advisor, is greater than when they were in the home previously.
And you mentioned financial advisors. So obviously, when you're talking about doing this, you want to keep in the loop a CPA, financial advisor, and of course yourself, just to make sure that let's structure this in a way that makes sense long-term financially for the client.
You forgot the most important component is the realtor to help them.
You need a real estate broker as well. Okay, got it. That's true. Okay, that's great, Fernand. Well, thank you so much for the overview, and I appreciate everybody watching. If you have any questions on doing a reverse mortgage, whether it's for yourself or maybe a family member, a friend, or a loved one who is, considering making a move, or just needs to access maybe some of the equity in their property, Fernand is the person that you want to speak with. So until next time, appreciate you joining us, and hope you're doing well. Take care. Bye for now.